Okay, welcome back to our continuation of our financial statements and analysis. So for today's lesson, for part 2, we will discuss about the ratio analysis. So ratio analysis is very important because it is the process of asserting financial decision through means of ratios. So in other words, the purpose of how we evaluate our well-being. And this is the definition, di ba, the title of how well I am in the company. So, these values used for calculation and it's extracted to the financial statement. So, di ba, meron tayong notes to FS. So, basically, those reports came from or correlated to the ratio analysis. So, what are the types of ratio? So, by the way, I'm using this platform Edu CBA, you can they have a free access for the financial materials. That's why I'm not requiring you a certain books. Kasi if you may ask me, marami kasing definition and references to. So ako, tinuturo ko lang yung basic fundamentals ng finance na where you can use it in your daily lives. So if you're talking about books, maraming dyan na magandang books kung Signage, MacGrew. So, okay lang yun kung ano yung nakikita. Kasi pare-pareho lang naman ng when we compute for certain things, pare-pareho lang yung makikita nyo sa books. Ako, ina-emphasize ko lang, what is the importance or rationale of getting the computation, diba? So, the ratio analysis may branches yan. We will discuss for today the liquidity ratio, profitability ratio, solvency ratio, turnover ratio, and earning ratio. So, yan, may mga branches yan, how we compute each branch kasi there's a certain computation and rationale why we need to get this. So if we are talking about quick quick ratio and current ratio, we're talking about liquidity, di ba? Liquidity, ibig sabihin, the ability of the company to pay their short-term obligation. If you're liquid, ibig sabihin, you have a cash that you could pay your or settle your obligations. So, ratio is a process used for calculation financial ratios. So, types of ratio, yeah, we go to liquidity. Liquidity, this type of ratio in measuring the ability of the company to take care of its short-term, like what I mentioned, short-term obligation, and a higher liquidity ratio represents that the company is highly rich in cash. Siyempre naman, di ba, I am telling you, if you have too much in cash, pangit din yun kasi natutulog yung pera natin. We cannot diverse our money by certain degree on the cash basis. Pero later on, I will teach you to how you will diverse your cash and where to put in your money. So, step by step muna tayo, baby steps. So, under this liquidity ratio, we will compute for the current ratio. So, current ratio is the ratio between the current assets and current liabilities of the company. So, it is used to indicate that the liquidity of the organization and being able to meet its debt obligation in the upcoming 12 months. So within the year, it is the indicator wherein you able to make or settle your debt obligations within 12 months. So the higher the current ratio will indicate that the higher capable of repaying its short-term obligations. For example, this is the current ratio for formula for under liquidity ratio. So it's current asset divided by current liabilities. So what is the example of current ratio? Let's go to the slide. So there you go. So we have current ratio. Okay, for example, you have a 65 total current assets So ano ba yung composition ng current assets? Cash. Okay? Inventory, prepaid. 'Di ba? Prepaid ibig sabihin, prepaid asset is you purchase in advance at hindi mo pa siya na ma-maximize. For example, binayaran mo in advance yung Meralco mo, yung utilities mo, that is considered a prepaid expense. Although, it is a utility, hindi mo pa na ma-maximize kasi you paid nga in advance. So, that is an asset. So, divided by your current total liabilities. Current yan, ibig sabihin within the year. So, apparently, in terms of current ratio, i-analyze, it's 1.55. So, meaning, if you incur a positive current ratio, ibig sabihin, 1.55, so far, okay ka naman. Kapag ang standard kasi is, if it goes down to less than 1, ibig sabihin, hindi ka liquid. Kasi less than 1 ang ano mo, the acceptable one is at least 1 ratio and above. Okay, since you incur 1.5, given our example, okay naman yung performance mo, 1.5. Okay, 1.55. So, positive naman yan. Diba? So, kapag namang peak ratio is a certain information pertaining to the capability of fund to pay its current liabilities on the immediate basis. Okay? So, immediate basis what is the computation? Okay? The formula for that quick ratio is cash and cash equivalents. Ibig sabihin ng cash and cash equivalent, ito yung investment mo that has a maturity within 3 months. Cash mo, syempre, right away, you can get the cash, diba? That's the most liquid asset. So, marketable securities, yun yung 3 months. Within 3 months, well, within the year, that is example of marketable securities. So, let's find marketable securities examples, okay? What are the examples of marketable securities? So, we have again, yung capital securities, option, future, yung mga example, derivatives, okay? Which is, hindi naman lahat ay long-term ang bonds and stock. Syempre, may mga within the year din yan. So, meron tayong money markets, capital market, derivatives that is, could be converted within the year. Okay? Pero ang treatment, most likely, kapag capital market, diba, it's a long-term market, it should be higher, more than a year. So, itong profitability, at least within the year, it is converted into cash. Okay? So, marketable securities, kasi, even though that the capital market is a long-term investment, you could sell it Kaso nga in a lower price. Ibig sabihin, ang importante dito, ang rationale, you can pay your obligation immediately. So, the way is, you sell it at lower price or pwedeng at par value. Ibig sabihin ng par value at the same amount. Okay? The same amount. Pag pinurchase mo yung capital market mo ng $1,000, edi you will sell it at par value at the same price. Okay? So, ano napapansin nyo? Pag quick ratio, hindi mo kasama yung inventory. Kasi ang inventory, it is hard or it is difficult to convert it quickly into cash. Kasi you will be, mako-convert mo but not totally 100% like you can convert it easily. So, kaya hindi ko siya kasama sa quick ratio. Itong quick ratio na to is yung madali, yung mga account in finance or in accounting that you can convert it easily into cash. Itong accounts receivable, you could sell it as well, di ba? Yung sinasabi ko sa last time. Okay? So, accounts receivable, you can sell this accounts receivable. Pwedeng at lower price. Diba? So, divide current liabilities. Now, we proceed to profitability ratio. So, gross ratio, operating ratio, and net ratio. Okay? So, gross profit ratio, profitability helps us measuring the ability of the company earning sufficient profits. Ito naman, titingnan natin kung we're earning sufficient profit. Ito naman ang gustong-gusto ng mga negosyante. Okay? Pero, kung ikaw ang matalinong negosyante, titingnan mo lahat ng ratios. For your long term, syempre long term yung tinitignan natin when we invest. Okay. Gross profit ratio, calculated in order to represent profits over making necessary adjustment pertaining to cost of goods sold. Ito yung cost ng mga materials natin. So, what is the formula? So, you get the gross profit divided by net sales, yung total sales mo. Ibig sabihin net sales, nakadeduct na dyan yung marketing promotion mo, di ba? Yung budget mo doon. Mga defects, okay? Ano ba yung breakdown ng net sales? Breakdown of net sales. Tingnan natin para lang makita nyo lahat. Kailangan na alam nyo na rin yun. Okay? Ito. Okay. Ay, nawala. Ayan, oh. Ayan, sales revenue, interest revenue. So, lahat ng sales natin, meron niyang revenue, sales, pareho lang yan, ah. Meron yung mga breakdown. Andiyan na rin yung defects, diba? Gain on sales of assets. Okay, yung gain natin dyan na incur natin when we do interest for our asset, okay, interest from our revenue, it is incorporated in our revenue. Okay, so moving forward, for that, it's the gross profit divided by net sales times 100. So, we're getting the gross profit ratio for in a percentage, diba? Pag net profit naman, syempre, we're determining the overall capability of the company in reducing both cash and non-cash expenditure. So, we're talking about the net profit divided by the net sales. Okay? So, yun yung net profit ratio natin. So, for operating profit ratio, deductible naman, hindi naman kasama yung mga taxes, di ba? Operating expense lang. So, operating profit ratio is used to determine the soundness of the ability to repay all short-term and long-term debt obligation. So, ito, yung earnings before taxes and net sales. So, di ba, for example, kuha tayo ng manufacturing financial statement. Tingnan natin Tingnan natin example. Okay, ito, magandang example to. Okay. Okay. So, as you can see, nakikita mo na meron siyang net income, di ba? Net income pa siya. Kukuha ba natin ito na malaki? Hanap nga tayo mas malaki. Ito na lang. Ito. Yan. So, pag kinuha natin to, financial statement, kuha nga tayo ng financial statement. Hindi, bagyan masyadong maliit. Ayan. Kita naman, di ba? Ayan. Okay, ito good. So, when we see this, okay, we have income statement, okay? So, pag 31, ang reporting natin, December 31, ibig sabihin, calendar yon. Okay? Pag meron tayong two types of financial activity, we have calendar and fiscal year. Meron tayong 2 years. Fiscal year and calendar. Pag fiscal year, ibig sabihin, hindi siya exactong January 1st nag-start ng business operation niya. Could be in between of the year. So, ang ending lagi na reporting is, of course, if you have a one accounting cycle, which is 12 months. So, ibig sabihin nito, nagre-report siya lagi every 31st of January. So, calendar year siya. Okay? So, this one is they have the sales. Okay? And then, less goes, the cost of goods sold. And syempre, nakita mo purchases. So, ibig sabihin, merchandising na to kahit di ko pa alamin. Merchandising na yan. So, ang ibig sabihin ng tax, okay, earnings before taxes, is ano yung earnings mo bago pa idedakto. So, ibig sabihin, when we compute for this one, for example, let's compute what is the earning before taxes nito. Okay, so meron siyang 2,500, di ba? 20,500 minus the expenses of 16,000 minus 10,000. Tama ba? Ay, hindi. Meron pa pala sa taas. Sorry. Ang gross profit niya. Ito pala. Sorry. Meron pa pala sa taas. Hindi pa pala tapos. Ulit. So, meron siyang gross profit na 80,000. Okay? Plus, they have other income of 20,500. Okay? So, a total of 100,500. So, let's deduct the expenses, which is 16,000 for the salaries, 10,000 for the telephone and internet, or also known as communication expenses. So they have also water and electricity. They have 3,000 for the property rates and taxes. So insurance is 2,500 and advertising cost is 14,000. 654 for stationery. Okay, yung mga inventory management nila, how they station it, may mga cost din, bank charges. Okay, so ibig sabihin, yung total na yan, bakit negative? Ulit, baka nagkamali lang ako ng baka nagdoble lang ako. Excel ko na nga lang. Okay. Move forward. So, meron kang a total of 80,000 plus 105, di ba? 105. Okay, and then, ang total naman ay expenses. Ito, this one is gross income. So, gross pa lang yun. Sabi, hindi pa deducted yung expenses natin. So, yung gross naman, expenses, yung total expenses natin, would be sum of 16,000 plus 10,000. There you go. Plus 7,300 plus 3,000 plus 2,500 plus 14,000 plus 654 plus 906. So, hindi pa natin deduct yung income tax natin. Kasi nga, sabi doon, earnings before taxes. So, magkano ang magiging total income natin? No? Is what you call operating. Kasi operation pala yung binawas natin, hindi pa kasi sinama natin yung income taxation. So, you will just deduct this one to this one. Okay? So, your net income before taxes, this is your EBIT. Ibig sabihin, earnings before income taxes. So, this is your EBIT or income before income taxes. So, that's how you going to do when we compute for this one, for the operating. Kasi nga operating pa lang dinideduct natin eh. Divided by sales times 100. So, meron pa pala tayong isa pa under that branch of profitability ratio. And we have the ROIC or return on capital employed. So, we will just get this one divided by the capital employed. How much capital you allocate for your employment or yung mga people mo. So, we get the ROIC, diba? Kung pasok ba siya. For example, ang budget mo for the capital employed will be yung mga pasweldo mo, diba? 20,000 for example. That's how you compute. So, as long as it's positive, that is acceptable. Okay? So, pag negative, sabihin, hindi nakakompensate ng expenses mo, nung income mo, yung capital allocation mo for the capital employed. Okay? So, solvency naman, it is the ability, so we have liquidity, diba? Ability to pay your short term. Pag solvency naman, the ability of the company to pay off their obligation in a long-term basis. Ito, long-term naman to. So, under the solvency ratio, we will compute for the debt-equity ratio. So, debt-equity ratio as defined as a ratio between the total debt and shareholders fund. So, the total debt ratio is used to calculate the leverage of the company. Sabi ng leverage is the ability of the company to borrow money. Sabi ng leverage to borrow money. An ideal debt ratio is 2:1. So, ibig sabihin, kailangan ang ratio natin is 2:1. Paano yung debt equity ratio natin? Tignan natin yung PowerPoint natin. Hanapin natin debt equity. So, asset. Ito na. Itong quick asset Tas acid test, it's just the same terminology. So, it measures the ability without having to liquidate inventory. Kasi nga, ang hirap i-convert yung inventory into cash. Okay? So, hanapin natin yung tinatawag natin na debt ratio. Okay? So, it is the stockholder and creditors, di ba? Like, a lot of debt if the company can take advantage of financial leverage, or less debt, more equity, kung creditor, di ba? The buffer or protection. So, this one is, pangungutang ba tayo? Mas okay na maglabas pa tayo ng pera to cover our expenses. So, this ratio indicates a relative proportion of equity and debt. Okay, alin mas ideal? Siyempre, 2 to 1. Siyempre, mas maganda kung we could maximize our liabilities at the same time, so balance lang din yung pag-produce natin o pag-release natin ng equity natin. For example, you have a total liabilities of 112 divided by the total equity is 234, di ba? So, sabi dito, 2:1 ang sinasabi natin dito. Ano yung sabihin nito? 0.48, is it good? Okay? So, meaning to say, if we have a positive, a less than 1 of equity, okay, we arrive to 0.48, and ang sabi dito, the ideal one, okay, ideal debt ratio is 2 to 1. Okay? So, ibig sabihin nun na the total debt, it's still manageable, and dapat mas idealistic, okay, kapag mas mababa. Okay? Mas mababa, mas okay, because we could cover our expenses versus our funds. Okay? Automatically, mas maganda naman talaga yun eh, na mas malaki yung release natin capital over our utang. Diba? For example, more example of debt ratio. Let's see. Search for it That is 2:1 naman. 2:1, diba? Sige. So, close na natin to. Hindi natin yung kailangan. Okay, we have a new tab here. F1. Okay. So, let's search for the debt equity ratio. More example for this one. Kasi we're learning from each other and how we okay, let's see. Okay. So, meaning to say, if we have ito. Example. For example, imagine a company with a 1 million. Palakihin ko lang Tingnan natin example dito. For example, imagine that a company with 1 million in short-term payables. So, yun yung total liabilities sa may wages. Diba? Pag sabing difference sa wages sa salary, wages is per hour. Yung salary fixed yun. Every 15, 30, depends. O, twice a month, nakakapag-earn siya ng fixed salary. So, that is fixed compensation, that is what you call salary. Pag wages naman per hour. So, depends on the nature of your business. So, accounts payable and notes payable, etc. So, you have a 500 of long-term debt compared to 500 in short-term and 1 million in a long-term debt. If both companies have a 1.5 in shareholders' equity, then they have the debt ratio of 1. On the surface, the risk from leverage is identical, but in reality, the second company is riskier. Okay? Kasi, kaya siya naging riskier. It's because, okay, they have a much liabilities as to compare to the other one. Diba? So, kasi nga, meron siyang short-term liabilities, okay? And the other one had a 500 long-term debt. Okay? With a short-term debt. So, kumaga half. Okay? Half of long-term, half short-term. A total of 1 million. And they have a 1. Siyempre, mas riskier itong secondary because itong 500 na to, ang laki rin niya when we incur, itong long-term debt niya, mas malaki yan dahil ang laki ng ano niya. Ang laki ng interest niyan, 'di ba? Nagmamata yung interest sa haba o gaano katagal ka nangungutang. So despite that they arrive to a positive debt ratio of 1, okay, you have to identify, okay, what type of debt they are applied for the total liabilities. Is that a short-term or a long-term debt? So, yun ang mga consideration na take natin when we take about or we talk about risk management. As a rule, short-term debt tends to be cheaper than the long-term. Siyempre, it is less sensitive in terms of the interest rate. The second company interest expense and cost of capital is higher. If this will fall, all long-term debt will need to be refinanced, di ba? We have to refinance again, which can be further increase the cost. Diba? So, kagaya nun, if there is a rising rates would seem to be favor with the long-term debt, but if the debt can be redeemed by the bondholder, it could be still be a disadvantage. Ano ibig sabihin nun? So, if ikaw, meron kang utang, and then, of course, we have to do with the interest sensitivity, okay? So, meaning to say, kapag nagtaas, okay, yung long-term debt na yan, okay? So, syempre, it could vary depends on the performance within the economy, within the country, di ba? Ba ngayon, next year, magkaroon ng inflation, di ba? So, you could apply naman for a fixed, okay, or variable interest. Kaso yun lang ang iintindihin mo. When you apply for a loan, you have to identify kung fixed or variable yan. Siyempre, kung fixed yan, nakakontrata ka, regardless ito magkaroon ng inflation, you will pay the same amount. Kaso nga lang, the opportunity knocks in kapag bumaba yan, okay, bumaba yung interest, sayang yung opportunity mo to get the lower interest rate if you are the borrower. Siyempre, pag ikaw ang kumbaga creditor, advantage sa yun. Bakit? Kasi, they paid you for the fixed term. However, if there's a form that the interest will increase, yun nga lang ang disadvantage mo. Unlike kung variable, okay, it varies as time goes by. Diba? Pwedeng tumaas yun, lalo na it depends on the situation of the country. If mataas masyado yung inflation na yung pagtaas ng produkto at bilihin, di ba? Produkto at ng serbisyo at pagtaas ng bilihin ng produkto at serbisyo, pag yung natatawag nating inflation, yung layman's term. So, in debt ratio, okay, we could also do the debt ratio for our financial personal finances. For example, a prospective mortgage borrower is likely to be continue making payments if they have more asset than debts. So this is also an individual for paying loans. So the more that you are, the lower the ratio, okay, at least the most effective one is this one, no? The most effective one, okay, the better, okay. The lower the loans could be, higher than the shareholders, okay, the better, okay? Kaso nga lang, if it doesn't mean na mas mataas ang liability mo o compared to your competitor, ay hindi ka na okay. Ibig sabihin, you are highly leveraged and that would be identified as a risky investment. Sabi nga, di ba, if you want get a high reward, get a high risk. Okay? So, ang debt to ratio is the ability of the company to cover their liabilities. So, as much as possible, total shareholder should be higher than the liability. However, if it's higher than your competitor, it doesn't mean that okay siya. I mean, that's not the basis. You are creating the impression that you are a highly leveraged and risky investment. So, syempre, ang target market mo ay risk taker. Kung low risk company ka and better investment, mga safe na yan, okay, you are targeting a risk neutral up to risk averse investor. Okay, for as long as it will not exceed, okay, your total liabilities or business loans. Okay, moving forward. I hope you get that point. The interest coverage ratio. So this one, medyo mahaba pala to. Ni isa-isa natin. So dito pa lang tayo. So next time ito naman. So maybe I could cut it until this one para naman bite size lang tayo. Okay? So, moving forward. Okay. So, for the interest naman, we're talking about the interest expense. Okay? This one is we determine how many times the profit earned, okay, before the taxes, were capable of absorbing its interest-related expense. Ibig sabihin, yung net operating income natin, can it cover the interest expenses? Of course, the lower, okay, the higher it is, the better. So, pag debt naman pinag-usap natin, the lower, the better. Pag we're talking about the capability of the company, the higher, the better. Diba? Turnover naman. Okay. Turnover ratio are determined to how efficiently the financial assets and liabilities of Argas had been used for purpose generating. So, we had fixed asset turnover. So, let's see in my PowerPoint. I think I have this one. Turnover ratios. Kasama pa ba to? Tingnan natin. It's a different na. So, we're done with the with the interest, liquidity, profitability. Ito, the higher the better. Higher the better. Pero syempre, tuturuan ko kayo kung hanggang saan lang. 3 to 5, okay lang yan. Basta huwag na mag-exceed kasi you have too many cash in the liquidity. Ito, the higher the better talaga. Solvency, the lower the better. And turnover ratio, except syempre itong interest ratio. So, ito next meeting, we'll discuss about turnover ratio and earning ratio. So, I'll cut my video now. See you in the next video.